The information contained herein is intended to help the viewer successfully navigate common IRS and Department of Labor requirements to help achieve successful results from their IRA. The information is not intended to replace information from your legal counsel or income tax professional. IRA Club does not offer or sell any investment. All investments have risk.
Welcome back to another episode of the IRA Club podcast, where we allow you to invest within all different types of alternative investments within your retirement account and a strategy that we like to call self-directing. So many of the things that we always face, and join me actually to my right is Carlos Lee, head of investments. Carlos, welcome back to the podcast.
Thank you. Thanks. Great being here.
Thank you, sir. And for those of you that don't know who Carlos Lee is, why don't you give him a quick little introduction?
Okay, so I'm the investor relations manager here at IRA Club. I'm the one overseeing the investments that come through. I have a team with me that helps put documents in and does an initial review, but I'm the one that finally has a say-so about whether or not something's missing.
Yeah, so what we're going to talk about, Carlos, today is due diligence. What does that process look like? What should investors be looking for? And most importantly, and the reasons why is because you know this and I know this, IRA Club gives the control back to the investors, right? Many of you have retirement accounts at Fidelity, Vanguard, and Schwab. Most of you that are listening probably have never known that you could take a portion of those retirement funds to invest in alternative assets. But Carlos, what is the one thing here at the IRA Club that we can't do?
We cannot pick your investments for you.
That's it. So the fact that we can't pick your investments, this is where the disconnect happens between the investor and IRA Club most of the times. Why? I hate to say this out loud. Many of us cannot identify investment opportunities, right? And the fact that, and I don't want people to understand this, that, never be worried about the process of opening and funding. We went to great detail in a couple of our previous episodes on what that process looks like. But for us, the challenge is always having those individuals identify the very last step. Sometimes, in fact, Carlos, don't we kind of work backwards with our investors? What we say to them is, go find the investment opportunity first, and then we'll open and fund your account. So that's kind of what we kind of preach, is identifying, number one, and then performing your due diligence. But as the process continues of performing due diligence, and we can't choose the investment for the investor, I want you to also understand the roles, right? So, Carlos, what is the role of IRA Club once the investment opportunity has been identified? What does that look like?
All right. So for IRA Club's role, our main goal is IRS compliance. So we're making sure that your investment is tax advantage for your IRA. That means the titling, the investment paperwork, whatever it is, it's under your IRA's name and not yourself. We want to make sure that if they're issuing K1s, it's under your IRA's EIN. We don't want them to issue it to their social security numbers, because otherwise there'll be personal tax consequences, and that defeats the whole purpose of using your IRA, using your retirement accounts.
Yeah, and that's solely your role, right? Cross the T's, dot the I's, to ensure that there's no prohibited transactions. So remember, that's the easy part for us. But we got to go back to step number one, is doing what? Due diligence. How to identify the investment opportunity. Our one piece of advice, and the only piece of advice that we could give, is invest in
what you know
and understand best.
Yeah.
So that is our cardinal rule. So for example, if you don't know anything about, let's say, an oil and gas company or a life settlement investment opportunity, or let's say crypto, do not invest in these asset classes, because you won't even know what questions to ask, right? So that's step number one, as far as, for my opinion, the due diligence process, right? Now, there's a lot of imitators out there, Carlos, right?
Yes.
A lot. And you and I travel all over the country when we speak at events. What are some of the key areas that I tell investors when we go to these events? Because let's face it, when we go to these events, there are probably anywhere between 30 to 60 to 100 plus sponsors, all offering all different types of investment opportunities. So sometimes I feel like the investors, once they learn the strategy of self-directing, move their funds over to the IRA Club, they get kind of stuck because they're overwhelmed with what's out there? What should I do? What should I invest in? So what are some of the key things that you tell investors to focus on when, let's say, we're just using, again, the example of you're at an event, there's a lot of sponsors. What are some of the things that you're telling them to do if they like the investment opportunity? Now that they identified it, right? Let's just say it's a private equity deal or a multifamily deal. Let's just say, what is it that you tell the investor to do as part of the due diligence process?
All right. So it breaks down to two things. First thing is understanding the investment, what it entails. So some people that are getting close to retiring, they're probably not going to want to get locked into an investment where they're not going to have liquid funds for the next 10 years or so, especially if they're going to have RMDs coming up. They're going to want to make sure that they can take their RMDs, do what they need to do. Second thing is also understanding who's involved. And that's also one thing that people don't do enough of, I feel like. They're more focused on what the investment is and not necessarily who's involved. You just mentioned some events have so many sponsors out there. And of course, there's going to be overlaps with the investment opportunities. Maybe they know they want to do syndications. Well, they pick syndication. They, like a few different companies. The next thing is finding out who's involved. There's a couple of different things they can do. They can, of course, just Google search them, look for reviews, Better Business Bureau, Google reviews.
Those are things that should be happening off the bat, right, Carlos? I mean, that's just cardinal rule 101. Simple things like reviews. To your point, Google them. Make sure they what type of information are they throwing out there in the World Wide Web? But what are some like advanced searches? Like say, for example, if I'm Carlos about to invest $100,000 in a multifamily deal with, let's say, X, Y, and Z company, what are some advanced strategies or things that they could be looking at? Like what tools could they be using?
Yeah. So the free thing you could do is go on either FINRA, if they're a financial advisor or broker, you can actually search up their license to see if they're actually a broker like they say they are. Another thing you could do is go on the SEC website if it's a Reg D or another company that has to do filings. You'll see all the filing information there, their financial reports, things like that. You can also hire an attorney if you're spending, $100,000, $200,000 on investment. You can go ahead and hire me, do a search on them, Thomas Reuters, things like that, just to find out who you're dealing with.
Yes, Carlos. I want to drive this point home for those of you again that are listening. You said it best, Carlos. You're spending $100,000 in an investment opportunity for your future. Don't you think it's worth it to invest $250 or $500, as you mentioned, hiring a lawyer to do a thorough background check? Or, for example, Carlos, you know this firsthand. I get invited to speak at multiple events throughout the year, right? 40 plus. One of the things that are tools that I like using before, let's say, I get up on stage and there is a sponsor or potential partner that we always deal with, or a future partner, is I'll do a background check, right? That's part of my due diligence process. I want to know who I'm doing business with or who I'm educating, right, before I get up on stage. So if this person is looking to raise capital, let's say, again, a multifamily deal, right, with X, Y, and Z capital, using that hyperbole or analogy. So before I walk in, I look up in Thomas Reuters, I invest $250, right? And I want to do a background check because ethically and morally, if I did that background check and I find red flags, for example, that company has filed for bankruptcy in the last 7 years. I look for certain things like the reviews that they're writing on the company, what PR companies are representing them. Honestly, Thomas Reuters will spit out everything you want to know about that individual or actually the event itself. So, again, it's because I'm teaching, again, Carlos, this strategy to individuals that never heard of it, didn't realize that they could take a portion of their retirement funds, let's say from Fidelity, Vanguard, and Schwab, over to the IRA club. And they want to invest in this type of investment opportunity. It just, again, morally, I could never go to bed in peace if I ever found out some negative information. Okay, I will never do that. And this is something that I encourage you first-time investors that want to use a portion of your retirement dollars to invest in the alternative space. Would you not agree, Carlos?
Yes, I completely agree with that.
100%. So Now, there are a lot of imitators out there, Carlos. So we just mentioned some of the tools, and you talked about a lot of registered investment advisors. The other thing is I personally feel is every single company has a process. Okay. What does that process look like? You need to ask those type of questions. What they'll always come up to you, like say, for example, if you go Google somebody and you go look up the website, or again, you're at an event and they have the fanciest pitch decks you'll ever see in your life with these great charts and numbers and graphs, that doesn't mean anything to somebody like me or Carlos, right? We want to see all your past deals. We want to see, another good rule of thumb is, do you have skin in the game, right? Are you also have as much to lose as the investor, Carlos, right?
Yes.
So I always kind of look at that stuff, Carlos, but is there something else that, outside of like your team, right? Let's just say there is something that doesn't match, right? What is a level of defense that you offer to our IRA club clients, right? We've opened and funded over 15,000 accounts. You've processed thousands, tens of thousands, right? In your 8-year tenure here at IRA Club. So believe it or not, I learn a lot from this man myself, Carlos. I always ask for his opinion. He's part of the compliance team. What are some, I want an example. Like, give me an example of, let's say Adriana, hypothetical, comes up to you and says, "Hey, Carlos, I see a red flag. What is the course of action as part of the due diligence process for our IRA club members? What is it that you take to help ensure they don't cause that type of prohibited transaction or due diligence?"
Yeah. So for prohibited transactions, it's more straightforward. We do ask a couple questions to the clients just to go over, who is this person related? How are they related to you? What are you doing with the funds? Where is it going ultimately? There are some people out there that understand, oh, I can't deal with my parents. Well, what if I deal with my brother and my brother deals with my parents?
Yeah.
Things like that happen. And, we can try to ask these questions if they are really trying to avoid answering the question truthfully and honestly.
Yes.
We can't do anything about that. We're just there to help them say, hey, this could potentially be prohibited if you're doing X, Y, Z. Another red flag that we try to catch when they're making loans, for example, hard money secure loans, they say, oh, okay, 123 Green Street is going to be the secure property. And we ask, okay, do they have a copy of the current deed showing that they own the property? Do they have a purchase agreement showing that they are buying the property? What title company is involved dealing with this? We ask these questions, not just to be annoying and trying to get, the clients to do more work and slow things down, but we're just making sure that we have everything in order. Because let's say they do make the secure loan for 123 Green Street, and then 2 years down the line, the loan doesn't get repaid and they try to go after that.
We see that often.
An attorney's going to ask, well, where's a copy of the mortgage or something filed with the county so we can go after the property? Well, the property didn't even exist. They never bought it. They never owned it.
Yeah.
Things like this have happened. And that's why we ask these questions. We try to get ahead of it before something like that comes up.
Now, Carlos, how accessible is your team, right? If you are a current IRA club member, right? You've opened, you funded, you've identified the investment opportunity, you've done the due diligence. How accessible is the IRA club if somebody thinks they caused a prohibited transaction, or I'm not sure which form to fill out? Because that is still part of the due diligence process, right?
Yes.
So how accessible are you? How fast can you get those answers?
We're accessible. Feel free to give us a call. Our number, 312-795-0988. Just ask for investments. Myself or my team will go ahead and assist you. Also on our website, iraclub.com. You can schedule a call with me or another member of the investments team. You can also email us. All of these are ways that you can reach out to us, and we'll help you as soon as we can, because I know that some of these investments are on a time crunch.
Yeah.
I want to make sure that you get your answers in a timely manner to get your investments through. If you're trying to do them.
Now, going back to due diligence, Carlos, like we said, you see a lot of imitators, right, that are out there. And let me tell you something, these individuals can be very persuasive, right? You need, as part of the due diligence process, we talked a little bit of skin in the game. You also need to see what are again, we talked about marketing strategies, the pitch decks that are out there. You also need to be able to ask for the PPM, the subscription agreement, simple things that you need to review and ask to pass along to your lawyers. Correct me if I'm wrong, Carlos. But Are any of the deals that you see in the past guaranteed future
No.
gains?
No. So every investment has a risk.
Yes.
So no matter how much research you do, it's possible that the person that you're trying to work with, the company that you're trying to work with, they're completely legitimate, but sometimes, things go wrong.
Yes.
And whether it's real estate or whatever.
Yeah, let's give the example, right? We there was a huge run, right? Because we could see how our investors are investing because we can't choose the investment. And we know that multifamily syndications, private equity deals, specifically in the real estate world, has skyrocketed. However, banks were giving out loans to everybody, and in particular, some of the companies that we were dealing with, because this is an example of you cannot predict future or market volatility or what the market's going to predict. So for those certain companies that had, like, for example, a 5-year arm or 6 or 7-year arm, well, guess what? It came to bite them in the butt. And who paid for the consequences was the investors, because a lot of these operators could not sustain the doubling up on the interest and principal payments, right? So that's an example of, like, past performance doesn't guarantee future results. So I want people to be aware of that, okay? Another one, when I talk about imitators, Carlos, you know this, I'm not going to mention the client's name or the company's name, because we deal with over 1,000 different types of alternative investments, right? And we help teach the strategy to their students and their investors. There was an individual, just to show you how advanced some of these things could be, as far as imitators and imposters, where they would follow a specific sponsor's company, listen, you know who I'm talking about. I'm just going to say his initials, CH, CD, forgive me. And they would literally copy the PowerPoint presentation down to the T, his website, and they would act as registered investment advisors, something that you talked about in the very beginning, making sure that they're filed, right? You could see their type of securities license that they have, whether it's a 65, Series 6 or 7, if that's what they have. But you need to be doing those simple things. In particular, those imposters raised about $4.5 million. Some of that is retirement dollars, right? And most of us, that's our nest egg. Those are the things that we're most attached to, right? So be aware of these little nuances. And lastly, Carlos, I always laugh. You are a new father, my man. Congratulations. How old's the baby now?
4 months.
4 months. So you haven't had this experience yet, where my daughter, Ava, is now 3.5. And she always starts off the question with, why? Why this, Dad? Why is it this color, Dad? Why is the sky blue? Why anything on the planet is why? Be that person as the investor. Be that child that asks why to everything, okay? And Carlos, if there is a tiebreaker, everything looks good on paper, right? Everything seems like I'm ready to move forward, right, Carlos?
Yes.
But I'm still not certain. What do you think?
I say trust your instincts, trust your gut. If you're hesitating for a reason and you're asking yourself why this, ask them that.
I love
and then, if it doesn't sit well with you, don't force yourself to invest if you're not ready to invest. You need to be fully committed. You need to understand what's going on, what the deal is before you put your money into it. Don't just invest because a friend told you, oh, this is a great deal, or you heard about it on YouTube or somewhere online. You want to make sure that this is something that you're understanding and you want to actually invest in. And I like your example when you were talking about how Ava asked why.
Yeah.
There are times that clients invest without asking, why is this such a great deal?
Yeah.
They're not seeing some red flags in front of their eyes. If someone's offering a 50% interest loan, oh, lend me $100,000. I'll give you 50% interest on it for a year.
Too good to be true.
You have to ask why. Why are you, offering 50% interest? Can you not get it from a bank? What is the red flag here?
Dennis always says, right? High risk, high reward. Lower risk, yes, lower reward. But sometimes, just sometimes, that is what you need steady, right? We're still always preaching double-digit returns where the market's going to give you 6, 7, 8% on average, right? Because we look at things decade by decade here at the IRA Club, and that's what the market will give you, between 6 to 8%. We're always, again, preaching double digits, but Dennis Blitz, our president and founder, always teaches slow and steady wins the race, still looking for double-digit returns, 10% or more, right? Because that's what we're always ultimately trying to educate people on. But with every risk, right, there is that possibility. So don't use all of your retirement funds into one specific asset class. We preach diversification here at the end of the day, Carlos, right? We know that first and foremost. And then, yes, I gave all those great analogies about why this and why that, and listening to your heart sometimes is one of the best things. But also, sometimes, yes, it's too good to be true. Maybe just dipping your toes, right, into the investment opportunity. Like sometimes you may want to ask them, what is the minimum, right? Right. I like this. Everything looks good. Everything was positive. I did my due diligence. I looked at the reviews. I hired a lawyer. I went through Thomas Reuters. I looked at the Egner SEC website. I made sure that there was a 506C or 506B filing, unless it's a Reg A or Reg CF, which is a whole other topic of discussion, Carlos. We could talk about that forever. But don't invest everything into one asset class, especially within your retirement account, and just dip your toes into the water. Now, if everything pans out, right? If they're saying, oh, I'm going to, there's a dividend that produces quarterly or bi-monthly or monthly, and you go a year or 2 years and everything has been, happening as it should be within the terms of the investment, right? Within the PPM, hey, it might be a good opportunity to go ahead and ante up and invest a little bit more. There's nothing wrong with that, right, Carlos? So it's just, be careful is the $1 million question. Educate yourself on every single thing before you move forward. Make sure to do due diligence, right? And then execute. Now we're here, Carlos, to help walk them through this process. They're never going to be lost. No one here is going to be lost in this process. But the one thing, again, IRA Club cannot do for you is choose the investment for the investor. That is your role. We give you the control, but with control becomes responsibility, and that is part of your role. Our role, as Carlos mentioned, is to execute those forms, those investment docs for you, right? And we will ensure that you're not going to cause a prohibited transaction. We're going to cross the T's. We're going to dot the I's. Just, again, IRA Club is part of Meridian Bank, our bank, and you are just like you would if you're banking with Chase or Bank of America or whoever it is that you're utilizing, or small bank, your community bank. You have to present the investment docs to the bank in order for the money to be released, let's say, to the title company. This is Carlos's role. This is his team's role, that will make sure that we'll work with anybody that you want us to work with, right?
Yes.
A registered investment advisor, Carlos, correct me if I'm wrong, right? Title companies, correct me if I'm wrong. So anybody, go ahead, I'm sorry.
Yeah, we'll talk with anyone. So, you want us to go ahead and talk to your CPA, you want us to talk to, whoever it is that is handling the deal.
Yeah.
We'll go through and talk with you, talk with Dunn, whoever it is, just to make sure that all the paperwork's in good order, make sure that everyone understands what's going on and what it's going to take to get the investment and go through.
Carlos, I always thank you for your time. I appreciate your insight, and I'm sure you're going to be here on many other podcasts with me. And we are going to be bringing in a resident expert in the near future that specializes in due diligence. Chris Carley, he is part of the Kirkland Capital Group, and that is his sole focus. Is he teaches investors, his students, on what does that process look like from A to Z. We kind of gave a bird's eye view of literally 101 rules that you should be following. But for more information and how to reach out to Carlos Lee, visit iraclub.com. Not to mention, if you want great resources or a resource center has hundreds of man hours that you could sit there and review videos, most frequently asked questions, guides, forms, that, again, Carlos and his team, once you've identified that investment opportunity, done your due diligence, he is more than happy to walk you through that. And we look forward to seeing you at the next podcast. Don't, again, forget to visit us at iraclub.com. Join us for future podcasts by visiting us at iraclub.com/podcast. And lastly, for those individuals that want to, as I always promise during every single podcast, money-making ideas with your IRA and 401k. This is our latest book written by our president, the author of 17 books, Dennis Blitz. And it talks about, part of this book talks about due diligence. So I want you guys to go ahead, reach out to us, download the book. Any questions, they could also schedule a call. Again, if you go to iraclub.com, top right side, schedule a call at your earliest convenience directly with Carlos. Can they schedule a call with you?
Yes.
Adriana, Emily, and the rest of your team. So we look forward to having you at the next podcast. Until next time, thank you.